By the way, I'm supposed to try to minimize your tax, not make you pay more with it. Famously, the tax collector in the Bible was the most hated person with it, but my job is to try to minimize your taxes. We've got the, we get the slide presentation, or? Okay. Do I have the clicker? Okay, up and down. Okay, by the way, my name is Thomas Carden. I'm Director of American National Tax Advisors. I think I'm probably the longest and most volume speaker for you guys over the many years with this. We're going to try to go through specifically a little bit of stuff on the Thai tax changes that are affecting everybody. I just spoke 2 months ago, but there's it's an ever-evolving story right now with the Thai Revenue Department to this, and I'll try to give you guys as much of an update as fast as I can here. Okay, specifically I'm going to go through 3 things: taxation on pension issues, taxation of Social Security. What is the factor that makes you a target of the Revenue Department here in Thailand? Everybody able to hear me okay with it? Okay. Come on. Oops. Okay. Taxation and pension issues. Some revenue officers said foreigners who remit their pensions into Thailand must pay tax in Thailand on a remitted amount. So how can you know whether the pensions you remit into Thailand is taxable or tax exempt in Thailand? And then taxable in Thailand or tax exempt? Let's discuss the double tax agreement. By the way, this was all compiled by my resident Thai tax attorney, a beautiful lady named Cha-Cha. So I'm sort of just transmitting this to you guys. But it was done by a licensed Thai attorney on this. Okay. Is it a government pension or private pension? USA double tax agreements with this. This will generally make a big difference. When I say government pension, in this particular case, I mean you were employed by the government of your country, your home country with this. That's an old age pension is different, which would be Social Security. We'll talk about that later. Okay, a private pension is you worked for an outside company that wasn't part of the government with this. Oddly, for US citizens, that also means the states, because the states are sovereign entities, not part of the US tax treaty system. Okay, keyword underline. Any pension paid out of funds created by a contracting state or political subdivision or a local authority thereof to an individual in respect of services rendered to the state or subdivision or authority shall be taxable only in that state. However, such pensions shall be taxable only in that other contracting state if the individual is a resident of and national of the other state. Now what she's going to do is she's changing this to where you've got a little bit easier English read. So she's going to change contracting state to country, other contracting state to another country, that state, and paid by. We're going to make this a little bit easier for you guys to understand. Okay, so any pension paid out of funds or created by USA or a political subdivision thereof to an individual in respect of services rendered to in the USA shall be taxable only in the USA. So this is effectively how this works. You start plugging words in and making it a little bit easier. So now, however, such pension shall be taxable only in the other contracting state, Thailand, if the individual is a resident of and a national of that other state. I'm not sure we have anybody in that situation here. What this means is, in this particular case, only the US has a rights to tax pensions if you are a government employee in the US. Now that would include military, which we get a lot of retirees up here from the military, and so forth. Okay, I keep going through this. I'm going to try to go through this fast. I've got limited time. Okay, government services. Okay, to this US exclusive. The USA has exclusive rights to tax its government pension. Thailand does not have the rights tax exemption in Thailand. Okay, UK people. Anybody here? Okay. Yeah, I'm already familiar with you though. Okay. Any pension paid by the UK or a political subdivision or local authority to an individual in respect of services, government nature rendered to that state or subdivision shall be taxable only in the UK. Government pensions only stay taxable in the UK. However, such pensions shall be taxable in the other contract state if they're resident and a national of the new state. Okay. more? Did we get more? Oop, wrong button. Okay. Canadians. Any Canadians? Okay. You guys have good news and bad news. Okay. Pensions and other similar remuneration paid whether they consist of periodic or non-periodic payments for employment arising in Canada shall be paid to a resident or the other country state shall be taxable only in the first mentioned state, Canada. The bad news for you guys is Canada taxes you worse. So you would prefer to have them tax here with it. Okay, Swiss government. Any Swiss people? Okay. Swiss, good. Okay. Replacement for private pensions. Okay. Pensions and other similar remuneration paid to a resident of a contracting state. We're on the U.S. tax treaty. In consideration of past employment shall be taxable only in that state. Switching this around, pensions and other similar remuneration paid to a resident of Thailand in consideration of past employment shall be taxable only in that state. For the Americans who are in the room, this is what we've talked about for years, that you can get a refund on your taxes paid in the United States and taxable only here, but of course only if the money is remitted here into Thailand with this. So all these pensions, if they stay offshore and you don't bring this money in, are only taxable if the money is brought into here. Okay. Pensions and Social Security payment, pensions and others paid to a contracting state. I should do the same thing here. Canadian pensions, taxable only in Canada. Switzerland, taxable in Thailand. Tax issues with Social Security. This starts to get murky in a lot of these tax trees. Okay, the U.S. tax tree, I'll skip through this real quickly, states very clearly Social Security, which is your old age pension in the United States, is taxable only in the United States, not taxable here. Canada is the same situation, only taxable in Canada, not taxable here. Now for the UK citizens, this gets wackier through this. Okay. There's what's called the double tax agreement with the UK is a little bit murky with this. But what it has is it's called a non-discrimination clause. The non-discrimination clause in that particular tax treaty and several other tax treaties state that income has to be treated the same in Thailand as it would be in the other country to this. So currently, let's see if she put the next slide on this. It's going through UK, yes. Okay, so currently, Thailand law specifically does not tax Social Security to this, in their law with this. Now, because of the non-discrimination clause where they exist, UK, not Australia, US and Germany with this, you are free of your old tax on your old age pension for most of the European countries and the UK. Canada stays taxable as well with this. So only those countries, Thailand can tax it, but because they don't tax it by their law here for Thai Social Security, it's not taxable here as well. This has not yet been challenged by the Thai Revenue Department. They've not yet made a determination on this. They're working it up through the channel on this. But the good news is your state old age pension should not be taxable coming in here in Thailand by virtue of this non-discrimination clause. Really technical, but good news for most people with this. Hold on just one moment.
But it is taxable in Britain. We pay tax on it.
Yeah, but not taxable here in Thailand with it. So you can bring that money in and
already paid tax.
exactly, yeah, not taxable here at all. So you can bring that money in free to clear any Thai tax issues. It's a big issue with this. The potential exception to this is Australia. Australia, unfortunately, does not have a non-discrimination clause in their tax treaty. The Thai Revenue Department may still consider that Social Security part of it with this and allow that to go through. That's the weakest one right now is for the Australian residents in the room.
What about private pensions for UK?
Private pensions, let me go back to UK.
Those exempt or
Let me go back. I think we go back on private pensions to this one, Switzerland private pensions, Canadian. I'd have to remember, I believe actually no, come to think of it. From memory, off my head on this, there's no listings on private pensions in the UK tax treaty whatsoever, which means taxable in the UK, but a tax credit back to here for this. So both countries can tax, but Thailand has to give a credit for taxes paid back in the UK for private pensions. That's off the top of my memory with this, but I believe that's the case. Okay. DTA, taxation, Social Security. Okay. Okay, this is the joy. What's going to make you a target of the revenue department here in Thailand? Okay, Mr. A has a Thai bank account. Money is sent to the account for 400 times per year. Plus this account has at least 2 million baht held in it. The bank will send your information to the revenue department once a year. Okay, there's a fairly wacky American attorney who's talking about never file anything, don't do this. How was the revenue department ever going to know with this? This is how they're going to know. Okay, what this is saying is if you have 2 million baht in your Thai bank account, plus you've done 400 transactions, that can be ATM, debit cards, any type of thing with this, your information automatically goes to the Thai revenue department with this. Now, anybody familiar with the problems recently about opening up Thai bank accounts for foreign nationals? Okay, one of the things going through the YouTube guys as well. What's going to happen here before the immigration department asks for you for a tax ID number is the banks will start asking for your Thai tax ID number with this. And the biggest excuse of that is that will be to combat anti-money laundering rules. The reality of it, in my opinion, it's setting you up for reporting automatically into the Thai revenue department with it. Eventually, the first group will be asked for a Thai tax ID number when they go to open a bank account, and then they'll start doing a review of all the accounts and start asking for it in the future to this. The next step will be the revenue department, or sorry, the immigration department asking for your Thai tax ID number.
But you have to have at least 2 million in. So as long as you keep it below 2 million.
Not necessarily. It's 2 million of cumulative amounts of money put into it. So if you put in 500,000 baht, 500,000 baht, 500,000 baht, 500,000, so with over 2 million of deposits per year, it's going to hit that threshold, supposedly. Okay, now to give you guys a quick summary, sorry, limited time. Any pension paid out of the funds created by a contracting state or political subdivision or local authority thereof to an individual in respect to services rendered to that state or local authority shall be taxable only in that state. Okay, Thai people file a tax return via the website. Okay, now I've got 6 questions that were asked me, and I'm going to put on my glasses now to this, that came from members here. And again, this was all done by my Thai attorney with this. So you guys asked through email some questions. If I have kept a bank statement from December 2023, can I assume that I won't have to file a tax return at least until I brought in more cash than Thailand potentially in the future? Okay, like a lot of things, there's a little bit murkiness to this. Okay, you can assume that you won't have to file a tax return until you bring more money into the Thai bank account than the amount shown in the Thai bank statements from December 31st, or any bank statements. If he has kept bank statements as of December 31st, 2023, showing that the funds were already in Thailand before the start of the 2024 year, those funds shall not be taxable under the new tax regulations. Therefore, he would not need to file a tax return based upon that year to this with it. Now, it's the same situation if the money was transferred into Thailand. Theoretically, right now, you don't have to file a tax return if you're just living off of savings that was in your bank account prior to December 31st, 2023, as long as you've been a resident with us. However, that part may change. If the money was kept overseas, you may have to file a tax return, but you wouldn't owe any tax. The reason this was all grandfathered in starting January 1st, 2024. Income earned after that date becomes taxable. Income earned before that date is considered savings. They may want you to justify that. Now, and if you're bringing savings in from that date of December 31st, 2023, make sure you keep that bank statement with it, because that will protect you from being taxable here in Thailand. That's a really crucial document. Keep your bank statements from that particular date. Okay. Okay, will I ever be asked to provide evidence both on the cash I had on December 1st, 2023 and the amount I've transferred into Thailand, or is this an honor system? The answer of it is when you file your return, you don't have to provide that proof with it. There's no documents with this, with it. Although it's a good idea if you do file a return to send everybody documentation you have into it. However, should the Thai revenue come down and audit you, you will need that statement. So there's an honor system right now saying you don't have to attach it. In fact, you don't have to attach almost any document mandatorily wise, but you do need to retain in case you're audited. The next third one, I have the same question regarding pension income. Tax treaty between Thailand and Canada said any pensions are taxable in the country they earn, so long as I bring only money that was earned as pensions, even if earned after December 2020, can I still retain from filing a tax return, and similarly will I ever be asked to prove that? Okay. Under the current interpretation of Thai tax and international treaties, there are no provisions that exempt Thai tax residents from filing a Thai tax return, even if the tax rights are solely assigned to the source country. Based on this interpretation, my opinion is that Thai tax residents are still required to file a tax return if they remit foreign income into Thailand that exceeds the threshold of 120,000 Thai baht per year under Section 48 of the Thai Revenue Code. Cha-cha is really, really detailed, guys, with this. So even if the income is type which is not from the source country has the right to tax. What she's saying here is that even if you're bringing money in from the Canadian pension with this, that money would not be taxed by the tax treaty. But you need to file a tax return and tell the tax authorities that that money is exempt from taxation. Otherwise, if they do get this in records, they're going to assume that that money is regular ordinary income and is taxed. You have to tell them you're using the tax treaty benefits with this. Do it. Sorry guys, I'm rushing through this. With it. Okay. I have annuity payments, but those are purchased with money earned long before December 31st, 2023. I assume these don't count as new income taxable in Thailand. Even if they have to declare them on my tax return in Canada, they're taxable, but they're not new income. I'm assuming it's one of the Canadian gentlemen who wrote these questions. Can I assume that I still wouldn't have to need to file a tax return here if that's the only money I bring into Thailand? Under the new tax regulations, this annuity payment is considered old money, so is not required to file a Thai tax return. However, if you'd like to file a Thai tax return, you can do so by attaching an explanation stating this money was earned before January 1st, 2024. And the Revenue Department does not have the right to tax. In my opinion, doing this would be a preventative measure to avoid any misunderstanding by the Revenue Department, ensuring they don't mistakenly consider this money taxable in Thailand. Okay. Question number 5. An Asian article said that the use of a credit card in Thailand is considered income, but is also spending money earned before December 31st, 2023. Isn't it true that I still don't have to file an income tax return just because I've used a credit card here? Clear my throat for a moment. Yes, if the money on the credit card was earned before December 31st, 2023, then you are not required to file a Thai tax return. Now, to give a little bit of additional information on that, right now the Thais are not tracking credit cards with this, okay, at all. So you can use your credit card and they're not counting it as a remittance, okay? That can change in the future to this. They were, up until last year, they were stating, I'll get you just a moment, they were stating that debit card transactions pulled out of an ATM were not trackable. They changed that in December with this. But for right now, you don't have to worry about how much your money you're spending on your credit card, a foreign credit card with it. But subject to change on this.
I was just going to ask, like a foreign credit card.
Yeah.
At some point, you believe they will have the ability to know what money I spend with a U.S. credit card?
Okay, yes. I don't think that's going to occur anytime soon with it, because what they can do is they can run a computer program using AI through their system and look for credit cards that have been used, foreign credit cards that have been used more than 6 months. Once they identify that credit card under what's called common reporting standard, they can go back to the various countries and find out who owns that credit card to determine who's it. Now that's much more advanced than they're doing right now with it. But is it possible in the future? But right now they're saying they're not even doing that. And the ATM and the debit card issue comes down to if you're going in and you're pulling money out of the ATM machine with this, out of an ATM withdrawal from a foreign account, that's considered taxable remittance in here, whether it's a debit card or a credit card. Now, conversely to this, anybody brought in foreign currency in here from another country to this? When you go in and you do your transaction here to exchange it, guess what they're asking for? They're asking for your passport with this. And I would bet you if they're going to look at that passport number, that it will eventually go back and get linked as well. So the exchange right now is sort of, I can just bring in cash. That will get connected here in the future as well, because they're already doing the passport. They already have that information with it. Do it. Okay. Now, final question, guys. Final Jeopardy here. Are there any issues about transferring money to Thailand as a bank-to-bank transfer? Could the bank withhold some of the funds in case there might be tax due on them? Again, under Thai tax law, when transferring money to Thailand via bank-to-bank transfer, the bank typically does not withhold any of the funds for tax purposes. Good news. However, Thai Revenue Department may require you to report and provide evidence of the source of the funds, especially if the amount exceeds certain thresholds. If the money is deemed taxable, it is your responsibility to ensure that taxes are paid, not the bank's. The bank generally does not act as a tax collector in this case, unless there are specific circumstances, such as large transfers of income that trigger scrutiny from the Revenue Department. Okay, she's correct. She's very tax attorney on this. There are anti-money laundering rules that come into play in this as well. Okay, there are amounts you can bring into this country in cash, and this is always done to prevent organized crime. Organized crime wants to move bales of money around the world without any issues whatsoever. So they put in currency controls of generally about 10,000 US dollars. If you're trying to bring in a large amount of money, you could theoretically hit that stuff with it. Now, Thai's pretty loose on bringing money in, but be aware you could get stuck with problems, not based upon the tax side, but anti-money laundering rules with this. So when you're dealing with cash and trying to minimize the reporting on this, it gets harder either because of the anti-money laundering rules that are already in place with this stuff, to it. So be aware of that to this. In fact, a lot of countries are now limiting the amount of gold that moves in or out on the planes as well, because that's how a lot of people move this stuff as well with it. Okay, any other questions?
Well, so I think we can go ahead about 5 minutes because we also skip the sponsor slots of 5 minutes. So I'll give you the 5 minutes. I think a lot more people have questions. So let's go for another 5 minutes for question and answer.
One thing I'm going to state here, guys, is I was very nearsighted as a child. My parents had to go through a nightmare with doctors and stuff to this. So I'm very, very happy about helping to work with the Children's Sight Project here to this. And today, I will double your donations that you put in this envelope up to 15,000 baht. So if you guys put in 15,000 baht, I put in another 15,000 baht. So please donate to that project.
I don't think I need that. The question is, you say savings in December 2023. These are savings that we had overseas.
Yeah,
right?
yeah.
So if we had, I don't know, $20,000, pounds, or whatever, we could bring that 20,000 in if we can prove that we had that in a bank account.
In some type of cash or cash equivalent account anywhere in the world, that money can be brought into Thailand free of tax here in Thailand with it. So your tax issues are not the issue on that. And that can be, for the U.S., you have a stock brokerage account that has a money market account to it. It doesn't have to be a bank account; it can be a cash equivalent with this. So that money can be brought in free of tax. Now, if you weren't resident more than 180 days last year to this doesn't really apply to you to this. And when you're less than 180 days, these issues go away. But if you're here more than 180 days, you are tax resident here in Thailand, and all this begins. In fact, that date for savings begins on the first day you become tax resident for that calendar year. So if you become tax resident for starting in 2025, that date goes to December 31st, 2024 for you with it. Okay. Thank you, guys. I apologize for having to do that so fast, but limited time. Thank you.